Hey guys, what's up? So I'm back. I'm here to share with you another foreign index fund that we Filipinos can invest in. At this point, you're probably sick about hearing the S&P 500, Vanguard, or other ETFs surrounding the US equity markets. If today I'm avoiding talking about the US market, are there other foreign index funds that you can invest in? The answer is yes. What is this foreign index fund that I'm talking about? In today's video, I wanted to share with you how I've been investing in BPI's European Equity Feeder Fund in the last 4 years. I have to warn you that the performance of this fund is not really on the same level as US equity funds. This European Equity Feeder Fund, for me, is generally a hedge against my US bets. As I've said, the US market is very volatile, so my bet in the European market is just a diversification of my portfolio just in case something goes terribly wrong in the US markets for a short-term or even long-term period. So in this video, I'll be sharing with you the ins and outs of the BPI European Equity Feeder Fund, and I'll share with you the types of profits and losses that I've sustained over the years. So here we go. The BPI European Equity Feeder Fund tracks the MSCI Europe Index Fund, so that's the Morgan Stanley Capital Index Fund for Europe. And the interesting contrast between the MSCI Europe versus the S&P 500 or other US equity funds is that while US equity funds are generally investing in Silicon Valley companies such as Google, Microsoft, and Apple on one hand, and on the other hand, US equity index funds also focus on a lot of consumer-based companies, so they tend to invest in brands that we are very familiar with, Tesla, Amazon, so on and so forth. The contrast with the BPI European Equity Feeder Fund is that this index fund does not really invest in such sexy companies. The European Equity Feeder Fund really focuses on a lot of industrial companies based out of Europe, pharmaceuticals, financial institutions. So case in point, checking the BPI disclosure, the fund is invested in Astrazeneca, GlaxoSmithKline, GSK, Novartis, and Roche. For the financial institutions, there's UBS, there's Prudential, just amongst the many others. Also interesting to note would be the countries that the index fund would be spread across. So it's investing most in companies out of the UK as number 1, number 2 is Germany, number 3 is France, number 4 in Sweden, and number 5 in Switzerland as the top 5 countries that this European index fund is invested in. So what's the point of investing in a European index fund? Like I mentioned to you several videos back, for me, long-term investing is really investing in circumstances or the right settings, and you're really investing in the infrastructure, the stability, and propensity towards growth. If it's not the US, then we can also look to invest in something as stable as Europe. So hopefully I've gotten your curiosity and your appetite about this. Hopefully you're still there. So I wanted to go into the technicalities now. So similar to the BPI US Equity Fund, the minimum investment for the European Equity Feeder Fund is also $1,000. For that $1,000, in my 4 years invested in the fund, I've so far accumulated a return of 34%. So my $1,000 is now $1,340. And again, this pales in comparison with my investment in the BPI US Equity Fund, wherein my returns over the same 4-year period is now over 50%. But again, this bet on the European market is not going to be your best performing index fund, but it's really a diversification and a hedge against your previous bets. So yes, that's 34% over 4 years. But aside from these profits, I also wanted to share with you the dips and the lows that actually went on in those 4 years. So let me pull out my charts. Checking with my records, the per unit acquisition price when I got into the fund was actually at $106. This was in May 2017. So if you see in this chart, there are actually a lot of dips from 2017 to our present day, June 2021. You see prolonged periods wherein the net asset value per unit actually dipped below $106. So that means my investment was in negative territory from October 2018 to May 2019. The net asset value per unit went on a low as $90. So that's a 15% loss. Quite the loss that I had to stomach during that time. Of course, these are all paper losses. It picked up in the last quarter of 2019, but you see Again, with the great dip during the pandemic of March 2020, the per unit value actually dipped to as low as $80 per unit. My investment was down a good 25%, meaning that my $1,000 was just $750 at this point. But as is typical to investments in financial instruments, you see that this picked up. By July 2020, a short 4 months after, my investment had recovered and I was back in positive territory. The per unit value is now over $140 per share. So this brings us to what I mentioned earlier of over 34%. Alright, so I just wanted to share that with you. Many times we're talking about the profits and how much you've made, but the reality is you do deal with a lot of down days also. There are a lot of losses that you need to stomach along the way. The great thing about these investments is that there's always some historical data that we can look at. So before going into it, don't just take my word from it. Also check thoroughly, check the charts. If you can in fact part with your money and go through these rough patches, these down days, just so that you are going into the investment with the right perspective that there are promising returns, but there are also potential losses. So if you plan to invest in the BPI European Equity Feeder Fund, you can go to the BPI website with link down below. If you already have an account with BPI, you can log into the BPI online website, log in and go to the investment section. If you are brand new to investments, you will have to go through the investment assessment just for them to double check if in fact such risky investments would be fitting your investment profile. And if the test shows that you are willing to part with your funds for a significant period and bear with losses, then you can invest in this UITF, this Unit Investment Trust Fund run by the BPI Asset Management and Trust Group. Alright, thanks for watching. What do you think? Will you be investing in the BPI European Equity Feeder Fund? If you're interested to know more about these index funds, let me know in the comment section because there are more index funds out there. I've already shared with you a couple of videos, and if you want me to cover other foreign equity index funds, let me know because I'd be glad to research and tell you further my opinion if in fact I think those products are worthy of your money as an investment. If you've enjoyed this video, please don't forget to like, comment, and consider subscribing so that you can hear from me in the future. Thanks again for watching guys, and happy investing!